Expenditure. So the amount spent or liability incurred for acquiring assets or goods services is called as expenditure. Expenditure is of two types: capital expenditure and revenue expenditure. Now the capital expenditure is the expenditure which is incurred to acquire assets or to improve the existing assets, which will directly increase the earning capacity of the business for a long time. Now, for example, purchase of furniture. So the furniture, if it will be purchased, after that it will be benefiting the business for a long period of time. So it will be considered as a capital expenditure. Now let us move to revenue expenditure. Expenditure is that expenditure incurred whose benefit will be consumed or exhausted within a short period of time. For example, the goods which are sold or the salaries or rent, etc. So these are revenue expenditure which are for a short term benefit and are consumed or exhausted very soon. So the next is event. Basically, event is the outcome or the result of every transaction. For example, if enterprise A sold goods to enterprise B costing 50,000 rupees and he sold it to B for 60,000 rupees. Now, what's the profit which A enterprise got? So obviously the profit will be of 10,000 rupees. So this will be called as the event, or it is the result of the transaction. So what's the outcome or the result of transaction? That 10,000 is the profit which we got after selling our goods. So event is basically the outcome of each transaction. Now, next is revenue. So the total amount which we receive after selling our goods is termed as revenue. Now let us take an example of two business firms. Let the named be Enterprise X and Enterprise. So here is Enterprise X and Enterprise Y. Now suppose that if Y Enterprise sells goods costing 40,000 to Enterprise X, so this will be the revenue which the Y Enterprise gets. So basically revenue is the total amount which is received after selling goods or services. So 40,000 is the amount which we got after selling goods of Enterprise Y. So the next is income. Income is basically the profit which we earn after selling our goods and services. Let's take the example, for example, Enterprise A and Enterprise B. If Enterprise A sells goods costing 20,000 to Enterprise B and the cost of the goods was 18,000, but Enterprise A sold it for 20,000. So by looking at it, we can simply say that there's 2,000 profit or the income. So the income will be 2,000. So there's a general formula for income, which is income equal to revenue minus expense. Now what's revenue? Revenue is this 20,000 with the amount totally which was received by A, and the cost of goods were 18,000. It will be an expense. So the revenue minus expense will be our income. So the income is 2,000. Simply, the income is the amount or the profit which we receive after selling our goods or services. Next is loss. So loss is basically when the cost price of the goods is more than the selling price which is sold to the other person. Now let's take the example of enterprise A and enterprise B. Now if enterprise A sold goods costing 10,000 to enterprise B for 8,000. Now the cost of the goods was 10,000 and the enterprise A sold it 8,000 to B. So we can see that there's a loss. Now loss will be of, let's calculate it. Loss equal to, we'll simply minus 10,000 minus 8,000. So basically the loss will be of 2,000. So 2,000 will be the loss which is incurred by enterprise A. So the next is purchase. The goods which we buy for resale is called as purchase. Now there are basically two types of purchases, that is cash purchase and credit purchase. So goods which we purchase for cash is called as cash purchase, and the goods which we purchase on credit that we are going to pay in future is called as credit purchase. Now the next term is purchase return. If the goods which are bought are found to be defective or are returned due to any other reason, it is called as purchase return. So when we return our goods which we just bought is called as purchase return. Sale. When the goods are sold in a business firm, it is termed as sale. Now sale can be of two types, cash sale and credit sale. So when a customer buys goods and just pay cash for it is called as cash sale, but when a customer buys it and decides to pay it in future, then it's called as credit sale. So the next term here is sale return. The goods which we sold to the customer, if that customer returns back to us for any reason, let's consider it as defective or it can be any reason, so that will be termed as sale return. Next is stock inventory. So stock and inventory are both the same thing. The stock is a tangible asset which we have or which we buy for the purpose of resale. Now stock can be of two types, opening stock and closing stock. So the stock which we have at the starting of the accounting period is called as opening stock, and the stock which we have at the end of the accounting period is called as closing stock.